You know, one of the biggest trading lessons I ever learned, if not the biggest trading lesson I ever had, was to understand that my individual stock trades don't operate in a vacuum. They're really mostly moving in line with what the big major indexes are doing, like the S&P and the Dow and the Nasdaq. Understanding what those guys are doing gives you a clue as to why your individual trades are acting the way they are. Your individual stock trades are like ships on the ocean of the major market indexes, so you need to know the tide and current of the market to successfully navigate your way to trading profits. Are we in a bull market or a bear market? What will happen to your trades this week? Don't get caught out and don't miss out. To understand the charts you're about to see, get your free video course and manual, plus many other free bonuses at stockgossipfilter.com. Now let's begin the show. Welcome to this week's stock market update, a day later than usual. I was traveling yesterday, apologies for that. 17th of April we're looking at when the market closed last Friday. The market's about to open though in the next 7 minutes, looking to close up, which corresponds with how I pretty much, my take on this week and the last couple of weeks has been gingerly bullish for the week ahead, and the big picture view is that transitioning into what we don't know yet. It's not a bull market, it's not a bear market, it's what I call a fox market. So it's in between figuring out what it wants to do. However, my money is that this is going to transition into a bull market, and here's why. So this is the S&P 500, the major benchmark index. All these little ups and downs are the weekly prices going up and down, and these lines here are smoothing it out for us. They're the moving averages. The key one I'm looking at here is the 40-week, the all-important 40-week moving average. And what's so healthy about this is that not only is that the price above it, but it's curling upwards. You can see that now. First it started off breaking the downtrend, and now what we're seeing here, look at that, it's really turning up nicely now. That doesn't mean smooth sailing all the way. Nothing's like that with the markets, of course, but this is looking healthier. In fact, I can't call a new bull market yet, though, according to the rules of my system. Earliest that's going to be is probably going to be September. And the reason for that is that my system keeps you out of a lot of uncertainty. It's been back tested over 40 years. However, this is definitely an increasingly bullish situation. Let's look at the daily chart here. By the way, there's an important line of resistance here. This right here around 4146 on the S&P. If we could break out of that, that would be an important move. That would be a new high for the year ahead, a new high for the year. And so we're just on the cusp here of getting a new high for the year. So that would be great. And there it is right there. If we can just burst through there this week, that would be very healthy indeed. All the other indicators I look at are saying, yeah, this still got room to run on this cycle. The VIX, which is a measure of volatility, is absolutely cratered over here. A new multi-year low right there. That means there's really not much interest in buying insurance to the downside. So that concern about the crash is diminished a lot. Lunar cycle, I look at that. 4 out of 6 times, believe it or not, the lunar cycle predicts the week ahead's action, or the next 2 weeks action. So not to be sniffed at, which is why I always look at it. I mean, 4 out of 6 times, when you consider that predicting these things is pretty tricky, that's not a bad thing at all. So where are we at with that? We're ending the what you might call the down cycle, the waning cycle for the moon, and we get a brand new one. A brand new moon on April 20th, so not far to go at all for what should be an upcycle. So that's going in the market's favour. The other indexes need to agree with the S&P though, and here's the Dow, and doing a very similar thing. The moving average, the 40 moving average, curling up nicely as the price is well above it, but also like the other ones, a little bit stretched here. Rubber band's been pulled a little bit tight. But it's getting through it. Here's the Nasdaq, same thing. And tech stocks, as I said recently, is the place to be. They should be leading the surge out of the doldrums. I do expect that at some point we are going to get, a healthy correction. We want the price to start getting back down towards its average, and it could be any day. That's why I say gingerly bullish for the week ahead. So that's all for this week. I will speak to you soon. I appreciate you giving this video a like, and don't forget to subscribe or you could miss an important market call. Next up, a free webinar, how to read stock charts and trade stocks, so you'll know what I'm looking at each week and why, as well as be able to trade your own stocks. I'll speak to you next week.